Welcome to Trading Lounge on the 14th of January and for the SP 500. So I want to start on the monthly chart and look at the bigger picture here. So we have wave 3 over here, A, B and C here for wave 4, and these should be in brackets here too, these ABCs, but wave 4 here and then wave 5 up here. So we're looking at this being wave 1 and 2 here, and then 1 and 2 and 3 and 4 and 5 in here for the third wave and the fourth wave, which is interesting because if we look at wave 2, low of wave 2 here and wave 3 here, then it simplifies the 38.2% retracement level roughly where it is here at the moment. It's a little bit higher, and we know that wave 4s can get complicated. Just have a look at this one here as such, but that's a bigger degree of structure. So the current move down through here, if we take a look at that now on the weekly chart here, so our 38.2% retracement level comes in here, and we know that the current move down through here is in 3 waves. So that opens up in terms, there's 11 or 12 different corrections that you can get in wave 4. There's always been a bit of a battle on 11 or 12, but first of all, having 3 waves down here is either going to produce one of the 3 flat corrections or a triangle correction. Sure, there can be more complicated corrections within those outside of those as well, but we'll just keep it simple at this stage. So having 3 waves down through here, we can expect this market to pull back to the 61.8% retracement level. So let's go into the daily chart to look at this here. So first of all, moving down through here as a corrective wave, we can have this wave 4 in place here already, being close enough to the 38.2% retracement level here. So it's possible that there's a low in place here. Okay, we won't know that unless we start getting a larger impulse wave up through here, which will take us above this one here, is the 61.8% mark. This little box here is the 61.8% retracement level from this high down to this low through here. So roughly in there, and yeah, so just coming back to this concept here. So we can end up with the 38.2% is still down here, so we can still look at this as an A wave, a B wave and a C wave down here, which would be the B wave would be in 3 waves and the C wave would be in 5 waves, taking us into the 38.2% retracement. So that's also possible as well. So we've got a whole variety of things that can occur here. So we just need to be a little bit mindful. This wave C here may just come down and be a flat correction here, but that will depend on how high this goes as well, because a flat correction is basically say 3 waves down here, and then 3 waves back up here, kind of just being flat really within here. An expanded flat would take us above this top here, and then it will also take us down below this low here as well. So that takes out the top and the bottom here as an expanded flat. We've got to also could have a running flat in this as well. So there is a variety of things that happen. So we really just need to, if we're going to trade through this space here, we need to work in with structures that we understand and the levels. Going back to the monthly chart here, these orange lines and grey lines that you see in here, these are major trading levels and medium trading levels here. Then we go into minor trading levels. and sub-level and micro levels. So they're called the trading levels, and I just use them for support and resistance, and essentially they are the Fibonacci numbers as price ratio based on the price ratio over here. You can go to tradinglounge.com and get a video lesson on the trading levels. I find them really handy because they just strengthen the Elliott wave concept, because you really want to get into a market on the long side. You need to know where the support is, normally the closest largest number, and that's where the volume would be built up as well. So you need to have your stops under that volume. So having that simple support and resistance, I use Elliott for direction, and I use support and resistance for my trade setups. So just coming back into the daily chart here. So moving up here, if we're going to go up to, say, just roughly the 2700 area through here, we're either going to go up there well, we were expecting wave B to be in 3 waves, and we can look at that we could look at, let's just go to a 4-hour chart so we can just drill into this particular space here. So we could end up going like this here as an A and a B and a C wave for wave B here. Okay, that's possible. The market will stall in this 50-60% retracement level area through here. Yeah, just based on the geometry of it. But we know that the resistance is, well, it starts here as well, but it will be up at this level here, the 2650, which is important because if we're using the Fibonacci numbers in terms of the trading levels, 1, 2, 3, 5, and 8, between 5 and 8 here, the halfway mark is the 2650 area here. So it's going to be important. We can see that it's been important before, and it will play out like that over here as well, and will become useful once the correction at that level matures. So really we can look at it as an A and a B and a C up here. It's not really traveling like a third wave to the upside here, you know. In fact, when you look on the daily chart, for this, I won't use this particular chart because it's a CFD chart as such. So, but if you have a look at the volume, we're seeing diminishing volume moving up through here as well. So we know that the volume, you know, we know that everybody's a bit cautious of the move up here, but it is still lifting higher and still expect it to lift higher still. We'll look at that in a moment. So, yeah. In a correction to the upside, we can normally look at wave A here and move that over here, and wave C here being roughly the same length. So the 2650 is quite a nice target area to look at. But of course, we are dancing at the moment at the 2600 area through here, so we'll be able to use that as support and resistance as well. Currently it's resistance, and we'll need to look at it as support. So just moving into the hourly chart here, I've got it labeled like this here. So this is our B wave here. So what I'm not kind of sure of is, do we get, if I can just copy this here for a moment. So we can look from the low here. We can look at this, we can look at it as an A wave here, a B wave here, and a C wave up here for this B wave here. Or it's rather small for the B wave, so it's also possible too that we may just get an A and a B and a C here for the A wave here, then back for the B wave, and then up higher here into the 2700 area for the C wave here. So it's possible like that there as well. So we do need to be cautious what we do here. So what we're doing so far here is that we do have a long position off the 2500 here, which is a medium level, ML25. So breaking new highs here. Also too, with the trading levels video on tradinglounge.com, you'll learn about the basic patterns that occur at the levels. So there's a classic trading levels pattern and the variation on that, and also the overshoot pattern. So there's not a lot that a market can do when it comes up and hits volume here, resistance. So it's either just going to hit here and continue to go straight through it, or it's going to fail at this point, or it's going to have a correction at this point. If it's going to have some type of correction at this point, yeah, sure, you can see it in Elliott terms, but you could also see it in the way that I've drawn it out in those videos as well. It's worth a look because it just helps clarify things. The idea with trading is to continue to make it simple, like any professional craft. You know, you go through a process of, you know, confusion to start with, and then you start getting it sorted out, and you kind of make it complicated because you have to remember everything. But as you go on, you try to make it more simple and you know, simpler. That's why I don't really use indicators that much, because I can see whatever the indicator is, I can see it within the price action itself. And at the end of the day, it boils down to volume and price, and volume is extremely important because volume creates the price, it drives the price. So looking at a trend that's moving up here, we know that it's moving up on lower volume. As each daily bar moves up, we're seeing lower volume on each daily bar. So it's kind of just floating and drifting up there. It's not going up there in a powerful third wave. So that's why we're looking at it as a corrective pattern. So yeah, in terms of moving up here, we know that the length of wave A here is this one here. So we put that here, so that will take us to the 2650. We know that the 2600 area here is going to cause resistance. So I've moved the stop up a little bit from down here just over to here, just to protect what we have here at the moment. There's probably different ways of labeling this here, but I can see we've got 1 and 2 and 3 and 4 and 5 here for wave 1 here and wave 2 here. So that's quite powerful. It does leave wave 3 here kind of, you know, on less of an angle. So it's not displaying like an impulse wave, it's more like a corrective wave. And in here, I've pulled all this apart here on a tick chart here. This is 1 degree smaller here. So from the blue wave B, even though this is green here, we've got 1 and 2 and 3 and 4 and 5 for 1 and 2, and then 1 and 2 in here, and yeah, 1 and 2 and 3 and 4 and 5 here, and then wave 3 here. Wave 4 does overlap here. And then we've got 1, 2, 3, 4, 5 here for the third wave here. So I can map out the fourth wave here as an ABC in here as well, and still looking to, you know, we're going to make new highs because this is a corrective pattern here, but this may be just up for 1 and back for 2 at this stage. So just coming back to the hourly chart here, we've pretty much had our sort of arrival and sort of reaction here. So we should start pushing up into the 2650 area next here. So yeah, anyway, that's sort of it. So our target here for our long trade is bringing the stop to here, and we may get flipped out from here as well, because the other point here is that we can see a move up to here and then back here as an ABC correction, and then up here. If that's the case, I will move this stop a little bit lower to try and get higher here, but I just don't want it failing from here. I don't want to lose more than we have to at this particular point here. All right, I'm just going to leave it at that. The Nasdaq is the same. Yeah, and Amazon should break out and push high too. Let's just have a quick look at that for a second. Yeah, so I was looking at this as a third and fourth wave here as well for Amazon. So this is a correctional pattern playing out here. So we can go long above here. So any move back above the 1650, which is also a medium level as well, I won't go into that at the moment, but a move above the 1650 area here would trigger a long trade, or certainly this high. So normally what we do is we come down from the top here at a level, then down to here, and, you know, lower it down here. You can go long below the level here, but that's where the risk is. So you need that 1650 as a support there, and then we can look for a move up higher from that point. This count may not be correct here. There's other ways to view this as well. We could also put this as wave 1 and 2 here, and then this would leave this as 1 and 2 and 3 and 4 here and 5, and leave us just with the third wave here. It's a little bit hard to see this on the intraday chart here. Okay, I'll leave it at that. Cheers.